Good afternoon and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. Before we open the webinar, get ourselves somewhere to place our notes. And as I said, we will open the webinar with an introduction to AvaTrade. So as many of you know, we are a regulated company. We have 9 licenses worldwide. We exist since 2006. And if you got a question or a query along your journey, you can find our customer service right here at the bottom left. You can chat with us or communicate over WhatsApp. If you're using a different interface, you're welcome to send us directly an email to customerservice@avatrade.com, cs@avatrade.com. That's all the customer service queries. And with any kind of trading matters, you can contact your senior account manager that can be assigned on your file and give you full support through the process. That means that everything from basic calculations of your positions up to assistance with strategy or with any kinds of analysis, a senior account manager should be able to assist, which you can, like I said, can be assigned on your profile. Okay, and if you don't have a senior account manager, you can request the customer service depending on your eligibility for someone to be assigned. As I've explained in the beginning, we're gonna have the interface, we're gonna have the webinar on this interface, which is called the Web Trader. Actually, we'll put it down like that because what I'm gonna show you, the majority of the features displayed in here cannot be found on the usual platforms MT4 and MT5. So this is what I would like to separate it from the others. And as I said, we also have an app and it's called the AvaTrades trading app. Now, beside the Web Trader, we have the MetaTrader 4, MetaTrader 5. Okay, other options and other futures, and also other social, which I will explain just a few words because it's very useful for beginners, not just for beginners, but in a moment you'll understand why. What you can do with Ava Social, the nature of the name, Ava Social is a social media platform which allows you to follow and copy another trader. Why is this so useful? We'll understand in a moment. So let's take follow as an example. Okay, when the app is downloaded for free, you can all download and enjoy the app. And when I follow, let's suppose that we're trader A, we're following trader B. What will happen is we will get notifications that trader B, whatever position he's taken, will come to us as a message. And then we can similarly open the same positions or adjust it to our liking, which gives us the ability to examine a strategy without actually using the strategy. We can use the strategy if we want because we're getting the messages. But to open the position will be our responsibility. Now, copy from the other end will launch the position similarly to trader B. That means that if trader B, as an example, took a position with Aussie CAD, so we can see this what we have here, and he took one lot with this Forex, okay, what will happen is my account will do the same, right? So we're linking the account to that account and it will be automatic trading. I don't have to take a position because I'm copying the strategy, okay, to its full extent. Now, the beauty about using Ava Social is that I don't have to. I can have the strategy, but I can adjust the lot size, which again gives me a lot of control if I would like to examine a strategy, but I don't want to take it to its full extent. And I can take the strategy as it is and just reduce the lot size. It's not going to look like that. On the app, it's a bit different, but you can adjust the lot size to your needs. And this is also useful when I'm copying a trader with a bigger balance than mine. Because if I'm copying a trader with 50,000 in balance and I'm only with 10,000 in balance, naturally my account might not withstand the same margin requirement. We'll speak about it later on, but the idea here is it lets you adjust the size of the position and the necessary margin accordingly. So we said follow, we get messages, not automatic trading, more like maybe receiving a signals, not exactly, but that's very similar. And point, as we said, is copy trading. The account will trade, positions will be opened automatically. Great, and the app itself is download for free. Before we carry on, guys, are there any questions about AvaSocial, those two features that I've explained, or copy trading? Any questions? You're welcome to share with me. In the meantime, we will carry on as I've explained with the menus here to the left, and we'll see what can be useful. So beginning from the top, in here I have my personal details. In here I have the trade, which we are at right now. Now, if you're seeing a little bit different chart than what we see here, and you don't have all of those things we have in here, okay, and you would like to go back to here to the default screen from anywhere on the website. So what you can do is, let's suppose if we are here, we'll speak about it in a moment. We'll see what this is, but let's suppose I want to go back to the beginning. All I have to do is click here on the icon, then I'm back, all right? And I can also click in here on trade. Carry on down, we have positions. In here we have the orders, history, self-explanatory, and in here we have the signals. Now, what signals allows us to do, if for instance separated to get categories in here, as you can see, what it allows us to do is it allows us to receive pre-made analysis by the trading central, are not made by AvaTrade. The signals are made by the trading central. And with those signals, I can have analysis. Let's, as an example, if we take Brent oil, just as an example, we'll click on view signal. You can see that the signals are aligned by their time production. And we can see that this is the newest signal. And if I'll scroll down, we have the older signals. Okay, so this is the newest, and as we go down, it gets older. Why does this makes any difference if I'm taking a signal that was just made or a signal from 4 hours ago, 5 hours ago? Well, because the analysis that was done here, the signal is based on a certain agenda that I'm going to show you. Let's click on Brent oil as an example. See, the type here is sell. We also have the initial price, 61.04. We have the take profit, 59.96, and we have stop loss at 62. All right. Now, if I'll click here on view signal, and I will maybe click here to also expand for better visibility, then we can see we've got here some nice analysis which we can use, which is displayed with support and resistance. Resistance will be the green line displayed at the top, and support will be the lines at the bottom. We also have the signal last. Now we can see that the initial signal, the initial price was what's displayed outside, and the take profit and the stop loss are based on those support and resistance levels. Therefore, I know that it might be too complicated at this stage. It might be too complicated, but I will try and elaborate what each of those things means so we can connect. So the first thing we did is just to click on view signal. We expanded the screen. We're looking at some resistance, support here, all right. And naturally, support and resistance are higher. Just a second. Okay, so what I did is I clicked here at the left upper corner at the button here to change the time frame of the chart, because I want the picture displayed in here to match to the chart. Okay, the initial picture that we had was this. This is 1 minute. We have 4 segments. We have minutes, hours, days, weeks, and months. So we selected days to match the validity of the signal, so we can get similar picture. We can click and stretch it down, so we can have similar against similar picture. And then we can have the lines similarly to what's displayed in here. Of course, we're not obligated in any way to do what I'm doing now, but I think it's easier maybe to understand how it works with me putting the lines for you guys. Because now we can see where we are at. It's a bit difficult. It's a bit difficult. We'll paint both of them in green. It doesn't really, again, it doesn't really make a difference. It's only because we're in a webinar and I want to show you. But if you want guys to use the signal without to do what I'm doing now, I'm going to show you how to do it in 10 seconds. But those preparations, I think, can be helpful. This is why I'm showing it to you now. Okay, so this is not exactly the same levels, but I'm not going to make an effort to get to the same levels. It will be difficult to see this anyway at this picture. Okay, but the point here is the resistance are higher than the price, higher than the current level we're having. As we can see, 60. So we have support and resistance displayed in here. Okay, and we can, with this, choose a scenario what we prefer. It seems like this is in a sell type, and as we can see, the market is indeed bearish. It's been bearish for the past 2 weeks. Okay, don't worry, I know that it might look complex, but I will explain about it more thoroughly in a minute. Okay, and then we can see we have here several days. It matches with what we see here on the chart. This bit here, right here at the end. And based on that, I can decide, okay, let me have a sell. Okay, now, we can see that the signal here is with, the default here is 0.15. And since this is a sell type, I might want to reverse those levels. This is a sell, so we will reverse the levels, okay, that we had outside. Let's check again. 62. Okay, and 59. All right. Okay, this is not possible since this is a lower price than the existing price. And this is supposed to be the opposite, which we'll learn why it's the opposite very, very soon. Now, why is that important to take a signal that was just made and not the signal from long ago? Because the scenario that was made in here, if I'll go to the chart, I'll see that it already passed some serious levels, which has changed the analysis that was supposed to happen in the signal. Meaning, when I choose a signal, what I want to do is I want to have a brief look at the chart, the same way that we did now, and then to select the appropriate scenario and see if the scenario, maybe if we'll go with a buy as an example. As you can see, this ratio makes much more sense. We'll also learn about it very soon. Okay, with a buy, we have the take profit in a higher price and the stop loss in a lower price. What does that mean? Take profit, stop loss. Okay, well, what it means is we have several types of orders. We have orders that launch the position right now, and we have positions and we have orders that are pending. What are pending orders? So, for instance, right now we are with a buy and we are with Brent oil, okay? If we look at the current price is 59.9 and the take profit is 62.8 and stop loss is, all right. And as I have explained, there are several types, order types. So we have market execution, Don't worry, we didn't begin the second part. I'm just explaining so we will know how to use the signals here. We have market execution, okay, which is launch the position at market price, and we have pending orders. Pending orders are orders pending on the chart that triggers when reaching the price. Now, what does that mean? It means that I can automate the position to close with a profit when reaching the price, and I can automate a stop loss to close the position when reaching the price with a loss. So stops the position with, I should say, close the position. Okay. Close the position with a profit automatically. Okay, and position. Sorry for the typos, guys. I'm trying to make it all as swiftly as I can, so we won't delay about this bit too much. Close it with a profit, and this one with a loss. Why is this useful to automate take profit and stop loss? Because then I'm not required to wait by the chart and waste my time watching the chart. I can automate these positions, the orders. I can automate the orders, and as I have explained, when it reaches the price, I don't have to be by the computer. It will close it by itself. I can also automate my entry and choose at what price I would like to enter if I feel that it's unsafe to do it now, as an example. So those are, okay, the pending orders, 1, 2, 3. Now let's take something else. Okay, if we'll take gold as an example, and gold is in a buy type this time. So we're going to click on buy, and then we can see the, again, take profit and stop loss already here for us. Maybe we would like to adjust it a little bit, maybe a little bit more. Okay, maybe a little bit more. And then we can see that we have by default 0.06. We can maybe change it to whatever else we prefer. And we can see if it reaches the take profit, it gets to 3,085. And if it reaches the stop loss, if it gets to 3,085, we can make 450. And if it if it goes down to 2,998, we can lose 415. I didn't calculate any of those. This was done by itself on the platform just by placing the take profit and stop loss. And this can be very, very useful to automate, to simulate your positions. Now, as you can see, it doesn't take more than 10 seconds. Maybe we'll take crude oil this time, clicking on view signal, expanding the chart. Let's suppose we don't have anything here. This time we'll go with a sell type. All right. And we can already launch the position as we want. All right, great. So we can proceed. As you can see, we can search particular signal through those categories in here. If we'll scroll down, we have here the news section. In the news section, we can find all kind of fundamental analysis. One more thing I wanted to say about the signals. The signals are based on support and resistance, which means we have two types of analysis. Okay, we have technical analysis. We have fundamental analysis. What are the differences? The difference is technical will be statistics, averages, different levels, pivot points, and so on. All the whatever can be withdrawn from the chart. And fundamentals will be news, articles, reports, and so on. Basically, whatever we get from outside the chart will be fundamental analysis, which will need to be combined with the technical analysis, because this might be the why it's this will be the why, right? Why the market is going nuts, because Trump has changed the tariffs, right? So why is it moving? This is why it's moving. And we want to see in a moment, we will open some of the indices and we will see how it's moving. So how it's moving is technical analysis, and why it's moving is the reason, okay, behind it, which can be, as I've explained, multiple things. So one very convenient way to withdraw some fundamental analysis is in this nice news section, which is also provided by the Trading Central, provided for category, divided to categories in here, as you can see, Forex, stocks, commodities, indices, and cryptos. In here at the bottom, it's also displayed what instruments are related to this to the article in here. So if we'll click on 4 related instruments, we can see crude oil, gold, Bitcoin, and pound versus dollar. Very nice. If we'll scroll down, we have here discovery, analysis views, market buzz, all kind of useful things. We'll focus on market buzz in the moment. And in market buzz, we can find all kind of useful news, which are separated to the stocks. As you can see, each stock, each bubble here, circle here, has a certain number of mentions, which is how popular it is online. And we can see that Apple here with 789 is the biggest. We have here Tesla 571, Nvidia, Microsoft, all kind of Google, all kind of things. Let's maybe select Apple. We'll click on it. And we can see that this is also divided to separate topics. What if I don't want to go through all those articles? I don't have the time for that. Let's suppose that I only want to focus on the price target lowered or the product release. Okay, maybe a new device or whatever else they're planning to release. Okay, and we can see that if we'll click on here, it will filter it from the others, and we can specifically focus on the articles that we want. We can toggle it off. We have other parameters in here. The price may fall and all kind of price change, all kind of useful things. We can see some levels here. And we can go back, select whatever we want, and just directly do it. If you don't like it to, if you don't want to look like this and you would like to look at the traditional way, you can click on the table here. I'd rather use the bubbles. It just looks a bit nicer. Underneath, we have the economic calendar, which I'll also show just briefly here to give you the idea. We're not going to delay about it too much. Begin the second part very, very shortly, guys. Maybe it needs a little bit of encouragement. We'll click it again. Okay. And okay, now we can see that it's, if you notice that everything is like this all grayed out, you can see that those are prior events. And what you need to do is you need to select today. You need to select today. And those are events that already took place before the webinar began. And we can see that there is this red line that separates from what happened to what is upcoming. And we can see that there are all kind of different things here, Mexico and the Brazil and the dollar and all kind of things. What if I'm not really interested in all kind of things and I want to only focus on the dollar? So what I do is I click here on the box to tick the country, the flag that I'm looking for. Whatever else I want, I can just click it and it will filter it from the others. And you can see that we have a lot, we have 19 events here, which are medium and low. Okay, the way that the calendar is constructed is with the previous result, the anticipated result, the forecast it's called. The actual will only be displayed after the event will happen, of course. and the importance. Importance is how big of an impact we think that this event will have on the market. And we can see that what's displayed in here is low and medium. Okay, let's suppose that I'm not really a big fan of those low and medium. I'm looking for volatility and I want high impact event only. Okay, well, what I can do is I can click in here in importance. We have low, medium, and high. I can just select the high and only high events will be displayed. Keep in mind that this is today. So what if I want to maybe get more familiar with events for the next week or maybe even 2 weeks? What I can do is I can select 2 weeks forward. And once I have this blue trail marking the dates, it's going to display only high impact events from today 2 weeks forward and only for the dollar. To reset everything all at once, we click here on the reset and everything is back to default, unfiltered. We can search a particular event in here. And one last thing is you can add the event to your own calendar. You can add the event to your own calendar via the button here, add the calendar, and then to select from the list, depending on which email you're using. All right, I can safely say we're ready to begin the second segment. We've covered everything we should have had in the beginning. Therefore, we'll click here on the AvaTrade and we'll get down to business. And for that, we will look for a nice instrument to analyze today. Maybe we'll look at NASDAQ. Okay, which you have to agree with me that it's been very, very interesting in the past few days. As you can see, just a second, we'll use maybe a okay. Now, of course, we're looking at days. If we're looking at the bigger picture, NASDAQ has been increasing in the past few years quite considerably, passing a all-time high of 20,000. But recently, just in the past few weeks, it's been declining. Okay, as you can see, the resistance is 22,436. And we are at the moment, it seems like it's recovering. Okay, we'll dive in. We'll dive in, and we will see. We'll dive in. We'll use days. Okay. Great, great, great. Now, we'll click before we do anything. I would like to click buy or sell so we can open the order entry and we can design a position the way that we want. In here, it's also separated to 2 menus. We have the order entry and the instrument details, which gives us the instrument details. In here at the left upper corner, we have the search bar. We can delete whatever is here and then just type in and select it from the list. Okay, in here we already saw that from the signal section. We have here time frames. Now each candle on the chart displayed is showing us 1 day difference. In here I can change the layout of the chart if it will be days or if it will be candles or a line. Why would I want to change from a line to candles, the traditional line? Because the line does not display the same depths of analysis as the candlesticks. For instance, if we look at this beautiful reversal in here that we had yesterday and 2 days ago, we can see that with the line, it's just not going to be there. It's not going to be there, doesn't allow us to do the same level of analysis. So we can click here and bring it back. Besides that, we have here the crosshair, which if we will enable, we'll finally have data from the candles. Now we've got numbers, as we can see, which we didn't have before. Sometimes it's folded, just ensure that it's like this. And if we go to here, we can change the layout to have multiple charts. We can see that NASDAQ was not the only fluctuative index in the past few days. This is really just to give you a useful a useful tool for comparison. Okay, we're all looking at a very similar movement, which can be very helpful doing your analysis, right? To make comparison. Okay, and then I don't want to confuse you too much, so maybe we'll stick with what we're looking at right now. If we keep going to the right, we have here indicators. We'll use it in a moment anyway. There's no need to delay on it now. And as I said, let's get rid of all of this for the time being. Okay, and we'll put name. Okay, maybe if you want to search for that later. So, all right, the current price is 17,171. We'll stay with that as Nasdaq is at the moment moving anyway. Okay, and with this price in mind at the moment, I can see that we spoke about support and resistance briefly. Resistance will be the higher levels above my price. Support will be below my price. And we can see that Nasdaq has been lower than that 2 days ago and 3 days ago. It's been almost $600 less. And it's bouncing. And with this in mind, similarly to pulling a rubber band, the same way that I'm going to pull a rubber band, I'm going to pull it down. I can expect that it might go back. And in here, I can expect the same thing. And I have a reason to believe that Nasdaq, with those two tails here, might recover. And how far do I think that it will recover? We have two lines here, 20,066 and 20,555. Okay. What if I want to validate those levels and I want to, actually, let's mark maybe something in the middle, just another resistance line, maybe a bit farther down like that. Yeah, as a precautious. Why I don't want to place it exactly on the resistance? Well, the main reason is the same way that it just a second. The same way that it was declined and brought back, I don't want to place a pending order in here and then that it won't be triggered. So in case it turns around the same way that we had in here and in here, I want to catch it before it turns around. I want it to be triggered. As we have explained, take profit and stop loss are both automated orders which we can design to stay on the chart and will be triggered when reaching a certain level. Okay, and now with this in mind, I still wish to validate if the 18,171 is reachable within the time frame that I'm planning to hold this position. In other words, we can see that it was here just yesterday. So statistically, I have a reason to believe it might get there tomorrow or maybe in 2 days. Okay, but this might not be enough. What I can do as an addition is I can also compare the levels of how much it moved, which we can see here. The open is 17,781. The close is 16,993. We're talking about approximately 200. Okay, let's do it with a calculator just a second. Okay, so we've got, as we said, open versus close. Okay, that's $788. And we've got the high and the low, which naturally will be a bigger number, which is the high minus the low. Okay, so yesterday Nasdaq fluctuated between 789 to 1,471. Okay, but the problem with this is just we took only one candle. One candle does not mathematically, it doesn't stand for an average. It stands as an individual. To have an accumulative average, we have to accumulate more intervals. Now, this is very time consuming, and to start writing down all the numbers from all the candles, it's time consuming, okay? What we can do instead is we can click here on indicators and in here in type to filter just to put moving averages or average true range. And with average true range, we click and drag it to the right, and we can simply define how many candles we want to go back and withdraw an average from. So we'll select 10, we'll change the line maybe to the mustard, so we won't be confused with other colors. And we can see that this is actually an average movement, 740. 740 per day. Okay, not bad, not bad. How is it per? How can I know that this is per day? Well, the time frame displayed in here is daily. So if it's daily and we're looking at the ATR, it will display a daily movement. If this would have been weekly, so this will display a weekly movement, a weekly average range. If this would have been minutes, then it would have been the average per minutes. Okay. Okay, so the price that we targeted is 18,171. Okay, we'll bound the entry as well, so we'll have flat numbers because Nesta just keep moving and it blurs the calculation in here. So we'll go 17,171. Yeah, and this means that the pending order is based on the reference at the top. So we've got 1 to 3 pending orders, 1 to 3 execute when price hits, take profit and stop loss. This automates my entry. This automates my profit. This automates my loss. Very simple. And this is based on the reference at the top. So if sell is selected, this will be a pending sell, and if and if buy is selected, this will be a pending buy. Okay, remember that when we are with a buy, the take profit is higher than the price, stop loss is lower than the price. If we were with a sell, the take profit will be lower than the price and the stop loss will be higher than the price. Opposites. This is how you remember. They are opposites. Okay, so this one is painting green. We took 1,000 up. Maybe we'll use the same length to simulate the stop loss as well. Seems reasonable. It's underneath the support line and it suits me perfectly. Now I've got to take profit a little lower than the resistance. So if it turns around, I'll catch it beforehand. And I've got a support line, a stop loss at this, under the support line. So I have a reason to believe if it doesn't fluctuate beyond that, if it passes the support line and it reaches that level, the position will be closed automatically. Okay, we'll fix it. We'll adjust what's happening here. But just to recap, since we went quite swiftly, and I want to recap just quickly here to help whoever this was a little too fast. Okay, so we'll understand in a moment what's happening here. All right, we have the profit area, we have the loss area, we have a pending order here, take profit, pending order for stop loss. What will happen in this scenario is if it gets to the green line, we'll make $1,000. If it gets to the red line, we'll lose $1,000. How so? Because we have one indice, yeah, 0.01, one indice, and it goes across $1,000. How so? Because we've got the current price. Okay, we automated a pending buy, so we'll launch the position at that price. We're aiming for this price, and this is the price that we designed to stop the position if it gets farther down. Perfect. Now, what I would like to do is I would like to match those numbers to my plan, because even though it can show me that I'm making 1,000 here, we're looking at the daily chart, right? We're looking at $1,000 a day from a 10,000 account. Well, this number is not bad. It means that I'll make roughly between 25 to 30,000 if I average 1,000 a day. But I also want to be realistic. So what I'm gonna do is I'm gonna set a target of, let's say, 1,000. Again, 1,000 suits me quite well, but I'm not sure that one day will be enough, because the average is 740 and we are looking at 1,000 difference. So I would say 2 days might be reasonable. 2 days might be reasonable. Let's switch to weeks. Let's see how the weeks looks like. Yeah, that is not bad. That is not bad. I'll compromise for a week instead of 1 day, which I think can be great, but maybe a bit far-fetched. Let's say 1 week. Okay. Movements. Well, the ATR is 1,271.3. ATR is average true range. We add it through here. Just remember, it's very easy. Indicators, we'll click save. Yeah, and the actual potential average movement, which is my own interpretation for the average, will be 1,000. Great. Now, since 1 unit is enough, I don't have to adjust the lot size. What if I would want to make 2,000 or 3,000? What I could do is I could extend for more indices. Now I've got 2 indices. I'd make 2,000, 3 indices. Now I'll make 3,000, and so on and so on. So basically what's happening here is that if I will multiply my movements by my units, I have the sum. Okay? And I can also go target divided by movements to find the units. In this case, it was very easy for us, but it's good to know. So entry will be 17,171. Okay, pending buy. Great. We have take profit for the profit, which leads us to $1,000. That's not bad. And stop loss. Great, 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 great. However, this is not so great. Why? Because if I'll take the position as it is at the moment, what will happen is I'll make 1,000 or lose 1,000. And if I've got several positions, let's suppose I've got 5 or 10 positions, well, we're looking at a 1-to-1 ratio, right? This is now, guys, the next few minutes, I'm going to speak about something more advanced. Pay attention, because this can be very, very useful for you. When I'm looking at a 1-to-1 ratio, again, as I've explained, if I diversify and I'll take another 5 or 6 positions, basically they all lead to the same profit or same loss. Sometimes what I would like to do is I would like to cut the stop loss by half. I would like to cut the potential loss by half. Therefore, what will happen if I've got several positions? Let's suppose I've got another 5 or 6 positions, then the profit ratio will be higher than the loss. And if some of them have lost and some of them have made profits, I can compensate the difference and keep making progress. So how do I adjust 1,000 to be, how can I adjust $1,000 potential loss to, let's say, maybe 250? How can I do it, guys? Which again, let me just simplify. If I'll go potential loss divided by balance equals factor, and then factor times 100 equals percentage exposure. In other words, 250 divided by 10,000 equals 0.02, and then times 100 gives us 2.5%. And if I'll compare 1,000 with my balance, I'm looking at 10%, right? Now, exposing 10% in a single position is, how can I say it? Well, bigger than 2.5. It's bigger than 2.5, right? We all understand what's happening here. So, just a second. Okay, and I don't necessarily want to be exposed 10% per position. Let's suppose I'm not a big fan of that, and I want to be conservative, stay on the 2.5, maybe less than that. So what can be done? I can do one of two things. A, I can lower the load size. Well, in this case, we're already looking at the minimum load size. So how can I reduce it? Can I reduce less than 0.01? Unfortunately, no. My other alternative, and also keep in mind that if I'll do that, and if I will reduce the size of my position, this will also impact, what it will impact? The possible profit. So my other way to reduce the possible loss without to change the possible profit is simply to get the stop loss closer onto the entry. And if, for instance, I'll take the entry, and instead of taking $1,000 away, what is 16,171? It's $1,000 away. If instead of it, I'll take 250 away, right? What will happen is 16. I will then have a closer stop loss. 16. Let's see where that is. Okay, there we go. Excellent. So now what we've got is 69.21, and we've got 18,171. So we've got $1,000 away onto the take profit if it goes bullish, and if it, God forbid, if it goes bearish and it goes $250 down, we can potentially lose $250. Excellent. Let's suppose that I have another four positions with the same ratio. What I'll be looking at is, just a second. Okay, what I will be looking at is, if we had the same ratio, right? What we'll look at is possible profit will be 5,000, and possible loss will be 250 times 25 will be 1,250, right? This is if we keep the same ratio. Okay, so it's enough for one of the position to make profit to cover some of. Okay, well, I don't wanna dive too much into that because it's a bit complex and we're still in a webinar for beginners. But what we'll do before the end is to quickly ensure that we have enough capital to open the position. Since we can see that we're taking something in a higher price than our balance, so do we have the budget to take the position or not? Okay. As we can see, the price per indice is 17,335. Okay, it's irrelevant because we've already bound the price to a lower price, so we'll calculate based on that. Actually, I want to show you how the platform does this automatically, so we'll just stick with what we've got now. Units, number of units, well, 1. Okay, and then we can go price per unit times number of units equals, well, value. And we can see that the value matches the current price. If this would have been 10, well, 10 times more than the price. If this would have been one lot, higher 100 times than the price. This multiplies that equals value. For people who are using the web trader, you don't even need to know how to calculate this because the platform does this for you. If you're MT5 or MT4 user, remember this calculation. Okay, and then we've got leverage. What leverage does is it multiplies buying and selling. Multiplies buying and selling, and we've got a leverage of 1 to 20. Therefore, because we're multiplied by 20, what we can do is we can go and divide leverage by the value by the leverage, and then we've got the margin impact. In other words, 17,334 divided by 20 equals 866. Okay, you're probably wondering how I've done it so fast. Well, I didn't. It's written right here automatically for you guys. Super, super simple and straightforward. Okay, guys, before we say goodbye, we still have another 3 minutes. If you've got any questions about the system that I've showed you today, please share with me. Any questions at all? Okay, we've got a question from Freddie. So what this indicator is used for? Well, Freddie, I have used this indicator, okay, to validate the price that I've targeted. I've selected a price that I wanted to automatically close the position, but I don't know if this price is really realistic or not. Maybe if I would select this price, okay, in the blue line, and I'm thinking to close the position here. Look how much money I can make if I'll place it there. Much more money, right, Freddie? I can make a lot of money. But if I look at the average movement, it's only 1,279. How far away is that? How far away? You see that this is 2.5 times more than the average movement, right? Per week. So what this indicator does is it helps me validate the average movement. Okay, the average movement, which we've selected the green line, which makes sense. Which makes sense because it's still in the range. This is why it's called average true range. Okay, if we would select the blue line to target our price with the blue line, this will apparently be a bit far-fetched. Okay, a bit far away. So this is what the indicator does. There is a question here from Peter. Can you place a buy position on a bear market? Yeah, of course. Of course, you can choose as a trader. You can do your analysis and you can choose if you want to go with the trend or against the trend. Okay, for people who are not sure why bearish or bullish are called this way, is quite primitive. the reason, okay, is because a bull lifts his opponent in the air, right? If God forbid, if you encounter, a bull lift his opponent in the air, and then a bear slammed it to the ground. So this is a bit historical, but this is the reason. And of course, if you wish to buy in a bear market, in a negative market, you wish to go against the trend, yeah, you can do that if you want. I'm not saying if it's good or not, but it's possible. All right, any questions before we say goodbye, guys? I appreciate both of the Freddie, does it make sense what I've explained with the indicator? Does it help? To match the time frame on the chart. Yes, you are right. It matches the time frame on the chart. The ATR acknowledges whatever time frame we're using. If this would have been days, so it's based on days. If it's weeks, it's based on weeks. Okay, you see now it's the average. If it's hours, okay, correct. Very easy. All right, excellent. Any more questions, guys? Unfortunately, our time is run up. You're all welcome to join us for tomorrow live Q&A. Until then, I wish you all best of luck with trading. I hope you learned something today. Until next time, have a good week.